The altcoin markets are hitting a new low and the sentiment is going through the roof in a negative way. The question is, are we still going to see anything with the altcoins, or are altcoins dead? Are we going to expect a bull market or not? Let's discuss that in this update.
OKX is the first crypto exchange to get the MiCA license in Europe. To celebrate this milestone, they are running a campaign for new users where you can get up to 50 euros back in Bitcoin for relatively simple tasks. You can check the details in the link below. On top of that, they also have the lowest fees and publish their proof of reserves, so you know your money is safe. If you're still looking for a crypto exchange, sign up to OKX to receive the welcome bonus and start trading with the lowest fees.
The markets have seen a massive correction, or shall I say a massive manipulation, as last week we had something really positive and then the day after we had a substantial correction taking place on the markets. The biggest increase and the biggest decrease in the history of the markets. And that started by a pretty good announcement from Trump that he is going to build a crypto strategic reserve with Bitcoin, Ether, XRP, Solana, and out of nowhere, Cardano. Which to me tells that he doesn't know what he's really doing. And secondly, probably we underestimate what's going to come. Anyways, it was the start of one of the biggest scandals in the history of Bitcoin and ETH. And also for Cardano, by the way. And that is a positive signal for the markets. However, Bitcoin went up from 84k to 95k. And the day after, Trump is active again on the markets, deciding to halt the military aid for Ukraine. And he increased the tariffs for China from 10 to 20%. And he started new ones for Canada of 25%. By the time that this video is live, there's 1 day in between. It could be that he increased, decreased, or has done a lot of new stuff when it comes to tariffs. We simply don't know. He's going to move it on a daily basis to construct new deals that are favorable for the US. But Canada in itself responded immediately, implementing tariffs, and Trump instantly responded, which is kind of funny, that he increased the tariffs by a magnitude of that increase that Canada is going to implement against the US. And as a result, as far as I know, they constructed a deal which is going to result into Trump pushing back on the tariffs. If you are a company that is doing business with those countries, it's almost insane if you need to handle this by yourself. But it shows why the markets are so volatile and unaware of where they are going to go. Bitcoin has been seeing its upwards move of 15%, a correction of the same magnitude, and then another day of 10% up. So everything that Trump is doing is impacting the macroeconomic markets and is impacting the crypto markets. And I think two important factors need to be taken account of, which is one is short-term and two is long-term. First, the first impact on the economy is the Atlanta Fed, which is a smaller version of the country's Fed. They provide data on GDP expectations and all the numbers that we have. And they revised the GDP expectations for Q1. It went from 3.9% in growth to 2.8% in negative in 3 weeks. So instead of expecting the economy to grow, the Atlanta Fed is expecting that the economy is going to contract during the period of Q1 of 2025. So there are a potential implication that the market is going to be into a recession, which is going to have an impact on the dollar and is going to have an impact on the yield. So there is a potential recession going to take place. That means that inflation is not really the prime topic anymore, and that very likely, based on the tariffs that we're seeing here, the Fed is going to look at potential rate cuts to stimulate the economy. Trump has also said that this could have a short-term impact on the markets. And after that, it's likely going to be better and it's going to yield more money for the US. But people and countries are changing their mentality towards the US, at least for now. So China is getting 20% tariffs instead of 10. And the more the tariffs are going to be increased, the more China is going to turn around and go into the domestic markets, which means that they will sell the US dollar. They will be buying up their own currency. And to do that, they also stimulate through doing QE. So either they sell dollars to get their own currency back up by buying renminbi back. But on the other hand, they need to print a lot of money to stimulate the economy in the domestic market. So that pendulum is going to swing, but it's very likely that the dollar is going to be weaker and that other currencies are going to be better, like for instance the Japanese yen or the euro, compared to what we have been seeing in the past 2 years. And if that is going to happen, that has an impact into crypto, and that will also have an impact into our altcoin portfolio. Extremely risk-on assets like crypto, like altcoins, do not like uncertainty. They like certainty. They like an appetite where the markets are very beneficial for them. So during periods of chaos, usually they drop a lot. And that's what we have been seeing in the markets, where if we look at it from a fundamental, rational perspective, we know that Trump has a long-term agenda for crypto. And that is not what he's focused on right now. Instead of that, he's focused on solving Ukraine and starting trade wars. And we're just in the center of that chaos at this point, which is likely why we see the current weakness of the markets. But ultimately, a weaker economy is strengthening the money supply from China, is strengthening the fact that the US will fuel the economy through rate cuts, through printing more money, which then inevitably would be beneficial for the growth of altcoins. So let's look at the data and see where we stand, and just have an open view on what the markets are bringing us. So we are doing a TA here, which is a little tricky because there is a delay between the two updates. But ultimately, you can actually find the importance in here, which is that we're looking at the macroeconomic factors. And there is a very interesting chart that I would like to share with you that I've learned from Rational Root, or we discussed in a podcast that went live 2 days ago. The link you can find in the description beneath. I think Rational Root is super cool in what he's doing. It's a new way of analyzing the markets, and he has been spot on when it comes to the gap and the support of the markets. When we look at Bitcoin, I actually tweeted this the other day where I said, well, we are looking at 78K, and likely once we break through this high here at 86, it's going to increase quite fastly towards 95, 96K because there's not really anything in between. That's what happened. But I actually was expecting to see a higher low prior to it. But the higher low comes after. This is also discussed in one of the videos that we've done with Coinburo. But the thing is, if we look at this kind of area of the markets, then we are looking at a rejection at 96. We make a resistance at 91, and we fall all the way towards 82, which is technically a higher low. So technically, although we are super volatile with the markets, we print a new trend, which is up. So as long as Bitcoin stays above 82, and I hope it does before this video goes live, then the likelihood of breaking up again is significant. And the break upwards is at 91K. If that is tested and broken, then we're likely going to see a new all-time high in a matter of time. So all in all, it's not that bad. But once we look at Ether versus Bitcoin, that is where the drama starts to kick in, which, of course, it has been going all the way back down towards this wick here, which is not really positive. But I think it's going to reverse, and there's a chart that I would like to share with you, which I'm going to bring up in a little bit. But if we go to social media, we can see that the Fear and Greed Index is currently 20. In the past week, we've hit numbers of 15, we've hit numbers of 10, and that Fear and Greed Index is comparable to the Luna crash. which, if we go back in time and are very rational about investment opportunities, the Luna crash was a massive opportunity to step into the markets. Yes, we had FTX afterwards, but usually when the Fear and Greed Index is this extreme, that's where you want to get into the markets. And when it is extreme the other way around, that is where you want to get out of the market. So markets are irrational, so your decision-making should be rational. Now, this is the interesting chart. It is a very complex one, so I'll explain it to you. This is Bitcoin valued against gold. I've been telling that it doesn't really make sense to look at valuations of Bitcoin against the US dollar because you need to look at inflation-adjusted charts. And the best way of doing that is technically by looking at the gold price. And if we look at Bitcoin versus gold, then we can say that, one, this cycle is completely different than the cycle we have seen prior to it. And then secondly, we've not been making a new all-time high yet, and we have not been reaching any stage of euphoria. On top of that, we can see this pink line, which is euro versus dollar. And technically what it says is that when the dollar becomes weaker and the euro starts to do really well, that is the moment when Bitcoin starts to strive. That's also the moment where altcoins are likely outperforming Bitcoin. That is crucial. We need to have that weaker dollar. And despite all the chaos, it is happening. There is a fundamental ground that is currently happening. So if we look at euro dollar at this point, we see that we are reversing. So since September, we have been having a downward trend. And if you recall correctly, September was the first rate cut of the Fed taking place. And instead of the markets going into lower yields and a weaker dollar, we've actually been seeing a stronger dollar, which bottomed out in January of 2025. And also here in the crash of the 1st of February, we see that still the dollar has been really, really strong. And now the euro starts to trend up, make a big breakout to the upside, which is likely going to continue showing the weakness into the dollar and showing the weakness or the strength into the altcoins, which we can see when we look at the US-based coins. So for instance, Aave is having a green weekly candle. If we look at Aave versus USDT, it is one of the strongest bounces that we see. We basically corrected the entire breakout that we had after Trump getting into the office, and that is a great period to step into those altcoins. Aave is doing great, Chainlink is doing great, the Bitcoin pairs are doing pretty good at this point, and that is all correlated with each other. So the macroeconomic factors are more important. And although it feels a little bit weird and it feels like you have pain in your stomach of having those altcoins, this is the period to actually be buying them into your portfolio. And I think that in a matter of time of a few months, you would be happy of having them. Now, finally, we can see Wormhole at this point. I've been sharing this one. There is still very tricky. There's still a chance of a bullish divergence taking place here. But this week or next week, we need to bounce because it's falling out of its falling wedge. That might happen due to capitulation. But in the next days, to finalize this week, we need to bounce up stronger. So it's a super shitty market. But the first signs are there that the dollar is going to be weaker. The yields are going to go down. The money supply is going to increase through China, through Trump, through the Fed. The economy is going to be weaker, and therefore the altcoins are going to do well. So, that's the current view of the markets. The main question here is what to do. There is so much happening. It's so different than the previous cycles. The markets are changing all the time, and there's a lot of noise. And that's why I've been a huge favor of portfolio-based trading. If you're focused on the noise or any external factor that is basically moving your portfolio and you base your strategy on that, it is super hard to make the right decisions. If you are looking to get a time-based portfolio and you want to make decisions based on time, I don't know any stock market trader doing that, and it makes it super complex for yourself. And that's why I think a lot of people are currently in anger, and that anger is getting fueled by the potential case of having a likelihood of a recession. It's not high, but the likelihood of a climate where the markets are going to rotate and turn upwards due to a progressive president in the US, that is very likely, and that's very rational as well. We have, it's like a cross. So we are peaking in terms of short-term chaos, but underlying we have the fundamental growth of crypto. With the summit tomorrow, with all the things happening in March where the framework is going to be built and designed, the strategic reserve is going to kick in, but also the macroeconomic climate completely changing in favor of Bitcoin and all those altcoins through a weaker dollar. And I think that that is the baseline. And the baseline is also that basing your strategic decision-making on time is just not the right approach. It has never been the right approach, but people within crypto have been making this strategy for themselves. It doesn't work. It doesn't apply to the cycle. The cycle is way more complex and difficult. However, if you look at the price valuations and the fundamental projects that are required to build a modular ecosystem, then these valuations are irrationally low. And it does make sense to allocate yourself into the markets and to stay in the markets. It's all about staying in them, and as long as you do and most of the people around you are leaving, that's the moment you become the outlier and yield yourself that return.